Here are 5 things day trading I knew I wished earlier before I started. The first one is not to look for the perfect indicator. A plain candlestick chart is literally the best because it will show you the personality of the market. And one of my favorite exercises is if you start trading, use a 1-minute chart, start up the ES1 exclamation mark on TradingView and take a picture in the beginning so that you can see 1 or even 2 full days. After 1 or 2 hours, take another picture and just compare and do this for 5 to 10 times. And you'll see massive improvement in your trading because you'll better see what the market is actually doing. The second one is to focus just on one setup. What I really love are color switches, but any green or red candle would do it in the beginning because it's more about the area where to trade instead of what setup to trade too much. Because you could have the best setup in the market, but if it's not in the perfect area, that means while the market is moving in a direction, the setup is not that useful, because in trading we make more money if the market is going in one direction, and that's something what's very important. So while you see the market is moving in a direction, this is where we need our setup. And if you use a 1-minute chart, you have 60 candles within 1 hour, and then you can always have your setup, or very often, at these specific areas. The third one is money management, and that's more important than you think. Because the thing is, if you have a trading strategy where you adjust hours $10 to make $10, or you adjust $100 to make $100, now the thing is, if you lose 3, 4, or 5 times, you would need almost to make double of the winning amount. And here's the thing, there's something that is called the risk-reward ratio. The risk-reward ratio means if I can take $10 and I can make $50 out of it, that means I could now lose 5 more trades before I would start losing money. This is the one thing, the risk-reward ratio I think should be minimum 5 with a good trading strategy. Then we want to have multiple signals. That means if you trade, for example, on 5 different kind of days, what fits with you, then for 1 or 2 hours, that you can see 10 or 20 signals where you can put in $10 to get $50 out. Or you could even do that with a greater amount later on, so you could compound on experience. You can later put in $100, $300, $500 out to get 5 times the amount with a tight entry, stop placement, and take profit is what it's called. Also, that you cannot break your account within 1 day or even just 2 weeks. That you have good money management in terms of how many trades to use per day, per week, per month, and also in total, like for example, let's just say like 30 or 40 losing trades. That before that, then I would say like that it would be really painful, but not just within just 1 bad week or 2 bad weeks placing 20 trades. I think like 3 to 5 trades a week, 2 trades a day. I think that's a very good average. And this risk reward ratio, if you can get 5 times the amount out in winning in comparison to each losing trade, this is an absolute game changer, because there will be different kind of market phases. That means you might see a very similar pattern, and some days it will work, on some days it won't. It has something to do with different days and weeks because of the market. The market is always changing itself. The fourth one is trade less, observe more. And what I mean with that is that more trades doesn't mean that you make more money. It's more about to pick the right trades. Let's just say you have 10 trades that you placed within the past days, and 3 of these were winning trades. You made $500 each. That will be $1,500. But 7 would have been losing trades. That means so 700 minus the $1,500 you made, you would have $800 left. So here's the thing, you don't make more money now by having 30 winning trades and then just like 70 losing trades. I mean, that's also fine, but it would be better instead of just going by quantity, to go with quality a bit and just look forward now. Instead of $100 a trade, maybe it's possible to do the same thing now with $300 a trade. It means now $1,500 for a winning trade times 3 is $4,500 of winning. Then the trader would have lost, for example, 7 times $300, something like that. So that you just instead of $800, you now made $8, $16, $2,400, for example, right? So even though you had like these 7 losing trades and just like these 3 winning trades, it's just about seeing multiple signals, not taking every, and just taking those that made most sense. For example, when you see while the market is moving in a direction, aiming for a high or a low, for example, not with any indicators. And that's something what's very important, because you want to have something you can compound your experience on. You want to have the freshest informations, and this is something what candle can give you, and not any indicator when it comes to trading, right? Candles are also indicators, that's right, but most indicators are being calculated from the candles. So I think like there is no reason to be dependent on other indicators that are also dependent on the candles. Just getting the candles done first, and this is where you should have already some results for your trading. The fifth one is don't learn alone, or else you will waste years. There are people, they trade for years already with the market, and they can tell you exactly, like for example, I can tell you, if you trade the US dollar, they're only the market is reversing very often. If you can trade between 9 a.m. and 4 p.m. Central Time, somewhere 1 or 2 hours, it would be literally the best to trade the S&P 500 futures. Of course, using first a demo account that you can prove yourself, that you can trade with a $3,000 account, a $500 account that is not real yet, that you learn how to operate a 60,000, a greater account even than that for the future. And the best thing is literally to learn a good trading strategy, learn it with a demo account, make sure that you have a routine. It doesn't need to be always in the same time. It's just that you're on the computer, you take a picture in the beginning, you see what the market is doing, and then after that hour you traded, or 2 hours, you were looking at the market using a 1 minute chart, and put the 1 minute chart together so you can see 1 or 2 days. Then you take another picture of it, and if you do that for 5 to 10 times, I'm telling you, you will see progress, because you will see what the market is doing. You'll see when the market did more green than red candles. You will also see those areas where the market tends to move more up or down. But it's important to take these pictures, so a picture in the beginning and a picture in the end, and these 5 steps that I just mentioned in this video to improve your trading.